Hey guys, Brian Schroeder here with Buyers Club. I got Shawn Tihen with me with First Horizon. Sean's one of our featured vendors for the club. So, Shawn, I think we've known each other for around 20 years, give or take.
Yes, sir.
You've done a whole bunch of loans for me.
Yep.
And so basically a mortgage broker. Is that the way to define yourself?
Yeah, mortgage broker, mortgage banker. I mean,
Banker?
basically, I help people finance homes, So, yeah, I do some traditional stuff, helping people get into their primary residence or second homes, But here at Faster House, I'm typically helping people get into their investment properties, whether they're buying a rental property, I can guide them through that process. And then, of course, there's people doing the BRRRR, taking out a hard money loan. They need to get out of that hard money loan into a 30-year fixed loan, so they
Yep.
if they're not flipping it,
All right, so let's just break those down one
Yeah,
at a time.
absolutely.
So let's start with somebody's just wanting to buy an investment property and they got cash to put down. What's a typical amount that people are going to have to put down these days?
Typically 20%. 20% is the minimum on a conventional loan.
Yeah.
I typically recommend 25% because you get a much better interest rate.
Okay.
The more you put down, I shouldn't say the more you put down, but there's a big break if you put 25% down.
Okay.
Some people don't care about that. They don't mind paying the higher interest
Yep.
rate because it's a write-off. It just depends on what your goals and objectives are. Are you trying to get more cash flow?
Yep.
How much money do you have to put down? So that's kind of one of the things I do with my clients is really kind of walk them through the process. And being an investor myself,
Yeah.
I can look at it and say, hey, if I was in your shoes,
Yep.
here's what I would do and why.
Yep.
Do they have any other debt that they would be better off paying off instead of putting that other 5% down? It's about getting them in the best financial position possible.
Awesome. That makes a ton of sense. All right. So a lot of our investors are doing the BRRRR method. So they come to us, we do a hard money loan for them or to another hard money lender or a private lender, but they need to get refinanced out into a long-term loan. So kind of let's talk through that a little bit. So you got any tips for the people that are doing that?
Yeah, a couple of things. One, the biggest thing is start the process early. Know what your credit score is.
Yep.
Have you filed your tax returns? Some of these people are self-employed. This is what they're doing for a living, and then
Yep.
they come to me, and I'm like, you wrote off a lot, and you're not going to qualify for this. Well, then now they got to do an extension on their hard money loan,
Yep.
so more money there. So have a plan. Know what you can do up front. If you've already got all that done, okay, now when you're taking out that hard money loan, they have to remember that you can only refinance what your loan is for. So one of the tips I've been mentioning at the meetings is, you might have your own money to do the rehab, but if you want to get that money back out of the deal, Fannie Mae recently put a law into place, or a rule into place, I should say, about the seasoning,
Yep.
and you have to own it for at least 12 months. So somebody buys a property for 100, puts 50 into it, they come to me and want to get 150 back out of it, and they've only owned it for 6 months. Well, they can't.
All right, so let's break that down a little
Yes,
bit.
sir.
So I think you're basically talking about whether it's a cash out refi or whether it's, what do you call it, a rate and term?
Yep,
Okay.
correct.
So a rate and term refi, basically you're saying that if you're wanting to do a rate and term refi, which I think most of our investors probably want to do,
That's correct.
and with a rate and term refi, there's no seasoning. Is that correct?
That is correct.
Okay, so the goal is to do a rate and term refi.
Yes, sir.
So if that's the goal, you're saying make sure you borrow not only the purchase money, but the rehab money from your hard money lender or your private lender.
That is correct.
Then it just makes everything smoother.
It makes it, because you can roll in the closing costs and the escrows, but if you really need that money back out to do another project and you didn't put that into the hard money loan to begin with, we're going to call for the payoff, and they're going to be like, well, now you can't get all that back. So now that could, could make it difficult for them to do their next project.
So you're into a cash out refi situation.
And you have to wait 12 months before you can do that. And a cash out refinance, the rates are worse. Okay. So it's more expensive as well. So ideally you want to do the rate and term when all possible.
Gotcha. So cash out refi, you're looking at seasoning for 12 months.
Yep.
And your rate's going to be a little bit higher.
You got it.
Gotcha. Good tips.
Yep.
So, I think one of the things that's special about you, Shawn, is that you really listen to the investors and you guide them. You're kind of more of an advisor than just a sales guy. Is that fair to say?
For sure. I mean, there's a lot of people that can quote, good rate and good fees, but, I really, I take it to heart. I mean, I'm trying to help these people be successful. Obviously, if I help them, then they're going to be more successful. Well, guess what? They're going to come back to me. They're going to refer me out. I mean, I was taught, do the right thing, good things will happen for you.
Yep.
So I just try to guide people along the way to say, hey, if I'm in your shoes, here's what I would do and why.
Yeah, well said. And how long you been doing this?
Over 20 years.
20
So,
years.
Yeah, so
That's a long friggin' time to
and
do
you're right.
anything.
We got B&I together.
Yeah.
That was my first go at. I didn't expect to be doing it this long, but it's been a really good fit for me. So
Yeah.
yeah.
You love it?
I do. I enjoy it. I really like the investor side of it because I'm always learning from them.
Yeah.
So it's we're all competitors in a way, but we're also investors are willing to help each other and
Exactly.
you're learning about something new. I would never thought I was buying 4 family flats, for example. I'm not sure that that was a great idea, but here I am.
You'll like it in the long term, right? Well, very good. So thanks for coming in and chatting with us today.
I
really
appreciate it, Brian.
it.
Thank you.
Mm.
Bye.